you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I did a special video last night for those of you that subscribed to Fibonacci 24/7. I sent it out about, must have been about 8 o'clock, about 11 o'clock New York time last night, and I just went through those same numbers that we looked at. These numbers, 59.92, the high was 59.98, but we've stayed here all day. We've had 25-point breaks, but they still snapped right back, so it still has a chance to get above this level right here. There's two reasons. One, we have an astro date that's here today, and there's another bigger one coming in next week, but there's a pretty big one. But the reason for this is, you'll notice the move. Now, this, folks, right here, you can see this is a 5-day rally, okay? This is a 5-day rally. I want to show you the difference between the two rallies because it's telling you that the market is weakening somewhat. You see how the market rallied that far in that distance, okay? Now, if you move it over this way, you'll see that it should go way out into here, you see? But it's not doing that. You see the quality of the rally here. You see how strong this is here? And see how weak that is right there? That's telling you that the market is weakening. We see that in the Russell. Okay, that's what we're saying. There's what it looks like. And, folks, it could pick up steam and easily get there. But right now that it's been here now for 2 days. Okay, well, we got there yesterday late, and then here we are today. So, and we're still not done yet. Now, looking at it intraday here, you'll see this is what happened. There was the low that came in. We should be in a high right now, as you can see. And the numbers are pretty good. There was your low. There was your high. There was your low. We got a high coming in right about now. We'll just look at it. Got to take this trade. As a matter of fact, we should be setting right at the 618. Got to sell it here, folks. Going to sell it right here at 91, and I'm going to put a stop up here at 96, okay? Now, don't do that if you can't afford it. Well, I can't afford it, but I'm still going to do it. Okay, now let's move on here to a couple other things that we're watching. The hogs are still working, not much, but working a little bit. But the good news is the soybeans have come back. The November beans almost made the 382. Just bring it up here to show you. Remember, we bought them here, and they're right there, and now they're back to where we bought them, right in there, okay? Now, what I'm saying is that, you could have got out even here, but no, I think you have to stay with it. And the reason why is this rally that we had was 17 cents. Harmonic number in beans is 18 cents. So that's holding up okay. I am bullish this long term, so I'm sticking with it. I'll just do the daily here to show you why I'm bullish. It still looks bullish to me, folks. This is an ABCD. We haven't got stopped out. Our stop is right there. If they get us, they get us, but this is acting bullish. The news is incredibly bearish here because of the stuff that's going on in Brazil. The Brazilian crop, they can't sell it from what they're saying in the news, and I don't know if that's the truth or not, but that's what they're going by. The wheat is actually held up too. I haven't checked it recently, but let's get up here. And recently is the understatement of the year. Hold on one second here. We'll get the wheat up and see where we are here with the wheat. And it's has it gone up? Yeah, it's gone back up. We're up another up 7 cents now in the wheat, so that's acting pretty good. Also, if we take a look at the soybean meal, that's been acting very good. So all of those are starting to move, in the direction that we had hoped, and we'll see what happens with them as they unfold here through the rest of the times. First, I'm going to do is clean this up a little bit and get back to where we were with the stock market. There was another one this morning, folks, that was really exciting to watch, and that was the gold market. As we get up here and take a look at it here this morning, this is a short-term move in the gold. This is what we were watching here in the morning. I'll bring us up so we can see where we were. Okay, we were expecting to see the market go up pretty high, and we did. We got all the way up to here. When we got there, folks, when we got there, we were making a perfect A, B, C, D pattern right here off the high of yesterday, which was a 1.618 number. So you got two numbers to tell you that's where you were. That number was 07. Since that, it dropped around 12 bucks to that point right here. We're going to look at it here because this is over an hour of trading. But there you can see the A, B, C, D on the downside. We'll just draw that one in because that was earlier in the morning. And you can see there it is right there, sitting right there. That's when the low came in right after the open. As you can see, then we had the big run up. But look what's happening now. What we're going to do now is we're going to resort to a 4-hour chart. And I just, as you can see, a 4-hour chart. Try it again, Bozo. It's a 4-minute chart, all right? Because then I can see several hours. We're in 2 hours. This is a 2-hour. If you did a 2-hour chart, it'd be 2 bars. Okay, we've hit it 1, 2, 3 times right at 3,400. That's the 382. Now this is acting bearish because you had a high of 09. You dropped all the way down to here, 17 bucks, almost exactly 1/2 harmonic number, only able to get to the 382. Now if we start getting above this, then that's it. So I'm just showing you what I try to do is to look at these on a different time frame to find a trade that looks like it's going to be holding up in the right direction. And sometimes it does, sometimes it doesn't. It just depends. And you know what? Nobody knows what that answer is, so don't even worry about it. And as you can see here, right now it doesn't look too good. My sale at 91 is now out of, my stop will be here at 97. I'm not going to risk more than 6 cents in this. So that's what I'll be watching at here right now. And remember, these things only work about 60% of the time, and right now it doesn't look like it's working, but we're still in the topping zone. I mean, we're only a penny and a quarter from where we're looking at it, so that's what we're paying attention to here with these. I do these live, folks, because a lot of times you don't get to see what people do trade. And what I'm doing is, as a trader, what I'm doing is I'm trying to line up trades where I don't have to risk very much. So far, it's been a very good day. I had a nice trade in the gold. I missed the bonds by a couple of ticks, which would have been a monster. And then, of course, the hogs are still holding okay. The soybeans went in my favor, our favor. Soybean meal's in our favor. Wheat's in our favor. So all of those make it a good day. Great day? Not so much. But a good day? Yes, it is. So that's what we're going to be watching here as we look at this here today. Okay, now let's move on here and take a look at the currencies. Hold on, I've got to get this changed here for just a second. Dow vertical. By the way, the reason for the volatility in the stock market for the Dow Jones, folks, is due to one stock. Let me show it to you right here. It's one of the most expensive, and it has made new yearly highs. And not only that, but it's a very wild hell. It's Microsoft, folks. Let's get this MSFT. There it is right there. Let's get the daily up so we can see that daily chart. And you'll see that Microsoft is into new high ground. There it is right there. You can see it's made new high ground. The old high was at 63, and the high today was 73, I think. No, it was the high. Wow, today's high was not very much. It was only $1 higher. Wow, I thought it was more than that. Let's look at this on an intraday. Hold on just a second. Yep, that's all it was. Hey, we'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the dollar index. It took yesterday's high out by a tick or two and rolled right over. If we look at this on a smaller time frame, you're going to see what I mean. There was yesterday's high. There's the third. You see it takes it out by a little bit. It was probably exactly at 382. Let's just double check. I haven't checked that this morning. And sure enough, there's where it is. And now it seems like it's heading down. That tells us that the pound and the euro are going higher. So we're going to take a look at those. Okay, here's our euro last night. We'll get this up here. First thing we're going to do is move down to a 13-minute chart so we can see the smaller patterns. And you can see them unfolding right here. This morning, let's just get this out of the way. I have not looked at this, folks. I've been consumed with the stock market, of course, as I usually am, along with the bonds. I missed the bonds, oh, son of a gun. Gold's been good to me, though. Okay, from the long and the short side. Okay, here's the ABCD pattern that we see. Got A, B, C, D. Let's see where it extended to. There's two ABCDs here. We're going to do this one. It doesn't draw it exactly right, but this is going to be close enough. Right about there. And then we got the other one right behind it, which is right about here. Ah, shucks. Hold on, folks. Oh, this thing is sometime a little too sensitive. And there's your other one right here. You can see we went right up to it. This means that that dollar index is setting right on the moment of truth again. That's what it's telling you. Above here, this means the dollar index failed. Right now, it's holding its own. And if you look at this, you can see the retracement back. Remember, the dollar index is setting at that long-term 618, but here on the euro, well, this is the wrong one. I got to put the daily up. Sorry, boys and girls. Okay, there's the euro. 786 is right here. The dollar index made it, but the euro didn't. So that's possibly a sign that the euro is weakening a little bit. See, it didn't even take out the yesterday's high, all right? But the dollar index did. All right, let's move this over now, and we'll take a look at the pound. This is the one I really want to short, but they haven't given me the chance yet. I still think we're going to get a little higher. The reason why is we've had this run up. There's your 382. We're up 1, 2, 3, 4, 5 days. I think we're going to get a little bit higher than this. We might even break this out on the weekly. We've taken the long-term weekly out. Okay, and that's what I'm looking at as we get up to this level here, which is 13645. 13645 is 80 pips away, folks. That's the number that I'm waiting to see. That's the completion of this ABCD, okay, and this ABCD. That's why it looks so good. And then, of course, your stop would have to be right above there, so your risk would only be about $500, and that's the ideal thing, is to see what that risk is going to be. Okay, now let's have a couple of stocks folks have asked me about this morning. Usual culprits. The big thing, the news from what I heard from TFNN, CNBC, was Apple has been downgraded, believe it or not. Let's get the daily chart up. Oh, it is a daily chart. Well, no wonder it's been downgraded. You know, we had the big ABCDs, we had the rally, and you know that something's happened when the stock does this. It's got to be related to tariffs. See, it rallies. There was your low of everything right there on the 7th and 8th of April. We rallied up. You got lower highs. And today, actually, it was doing pretty good. It was higher. Even with the downgrade, it was higher. Now it's back to being unchanged on the day. So that's not so good. All it did, I believe, let's just look at this hourly chart, and you can see it just made a perfect, it looks like an absolute perfect ABCD pattern right there. Let's just double check to see how close it was. Well, it was supposed to go to 207 and got to 206 and a quarter. Remember, there's your 618. Mathematics precedes geometry. This is the geometry. The 618 is the mathematics. And so it still looks like it's a bit bearish. Now, the next one we want to take a look at is Tesla. I had heard that it was down on the day, but I don't know if that's the case. I probably shouldn't even. I should just, when people ask me to look at them, I'll take a look at them. But anyway, there's Tesla. Get up, I think it's down. Yeah, it is down. All right, there's Tesla. I'm still using that. Okay, now look. Tesla opened on the high, and it's been down all day, okay? Here, it opened on the high, went down. This is one that didn't work at all. This one didn't work at all. See where the opening price is in the middle of the range like this? Here's the middle. It opens on the low, had a big rally, and closed on the low. So you close below the opening, that's a negative sign. The next day, you open on the high, and boom, down it comes. Those openings really are important, folks. And that's because if you notice that volatility that we have in the stock market every morning, I'll show you, well, it's mainly due because of the, hold on one second, because of the Microsoft. But here's the action today. All right, now this is an hourly chart. Now look at this action on the open, folks. The Dow Jones rallies from 2550 to 27 a quarter, rallies 150 points. It drops 200 points and then goes back 200 points. Now that's just in the first half hour. And now we're still below it. Let's see if we can still show what the opening is on this. All I have to do is change this with a little bit of luck. We'll go to the bar candles, and we'll just see where we are. Okay, you see this is a 60-minute. Larry, give me a break. Got to do the daily. Shut the front door. And I have to do the whole thing over, so I'm not going to do it. This is just an important spot up here, folks, that we've looked at right here. Go back to that hourly chart. I forgot when you do an opening price, you can't use the opening price for the hourly, but it's not very good because you're looking at it on the daily. It works okay from the open, but you get chopped around a lot, so I wouldn't do it. Mainly what I was watching today was this number right here, 24647. We went 40 points higher, 50 points higher. Then we broke 200 points and then back up, and here's where we are right now, just setting right at that number. Not any different than anything else. So that's what we're looking. Now let's see how we're doing with that meatball trade we put on here. So far, we're not getting killed too bad. We might be in the downtrend now. We sold it at 91. Our stop was going to be 96, so we're going to see if it gives us any profit or not. We'll have to wait and see. All right, let's move over. And we have another stock that people want to ask us about, and that is Visa. The old people that cannot lose because they know how to steal from the poor. Hold on. There it is right here. Here's the long-term picture on Visa. Still going higher. It's also made new highs on the year, folks. I just realized that today. There was that high from February, okay? And now we made a new high on Visa. That's two of them. Visa and Microsoft out of the Dow Jones that have made new highs. There might be some others, but that's the ones that I can see right now. And of course, that's why the Dow Jones is probably stronger than anything else. And that's probably the reason. So we'll see. One of the stocks in the Dow Jones that is getting hit, which is CrowdStrike. So let's move on here. Take a look. Someone asked a stock about Goldman Sachs. Is another one. We still had that sale up there at 616. Let's see if that was still been working. Let's get the daily up. We got the daily. Where's the daily? Right there. Let's see where we at. Yep, it still would have worked. Remember, we had that shut the front door and raise the rent. Okay, get this out of the way. This was the long-term. Oh, Larry, come on. Okay, here's Goldman Sachs. Remember, we had this giant head and shoulders pattern from right back there, remember? And theirs was. The number was 16. The stop was at 22. And now it's still at 19. Hasn't made much money, hasn't lost any. We're going to look at one other one, and that is Google when we come back. 877-976-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we got Stan Harley in the house. Good morning. Good afternoon, young man. How are you doing?
Mr. Pesavento, Arizona Master Trader. Good to see you.
You can refer to me as just plain old Larry.
You're not plain.
Yeah, sure am.
You're awesome, dude.
Some days.
How's the weather out there in Arizona right now?
Believe it or not, Stan, we've only had 200 big days so far, and this is June the 4th. We didn't have our first 100 day until May the 31st, which was the longest time ever.
Wow.
So one more day like this, and I'm moving back to Scottsdale, where it's 105. So.
well, I lived in, as you know, I lived in Arizona for many years too. And normally we would hit 100 degrees the first week in May. But wow, interesting. Well, back east here in Virginia, it's just beautiful. I mean, it's just perfect. Nothing to complain about.
That's for sure. Speaking of perfect, what are we looking at in the market today?
Well, let's talk a little bit about that, shall we? I think we're probably in a brand new, what do you call, bull market, despite some fits and starts. But let's take a look at the long picture. And this is a chart I've showed in the past, but I think it's educational to talk about it once again. This goes back 50 years, and what I've done here is I've highlighted all of the dominant, what I call the primary monthly cycle lows. And what I've done is I've tried to force fit these into a singular cycle. So there's no expansion, contraction, just if we look at all the lows, put them into a spreadsheet and run the computational regression, what is the cycle that defines all of this, going back to the last 50 years. And as it turns out, all of the major, what I call the primary monthly cycle lows, etch out a cycle of about 82 months. Right there, 82.2 months. That's just under 7 years. 7 years would be 84 months. And has a standard deviation of about 6.8 months, as you can see there. And it's due once again in the May 2029 time period. So what's that, about 4 years from now? In the meanwhile, we're going up. Now, let's look at the same data, but parse it just a little bit differently. Cycles are not fixed beat oscillators. What they actually do in reality is they expand and they contract, kind of like an accordion. So one can force fit all the data into an analysis and find a fixed cycle that defines the data. On the other hand, we can parse this a little bit more accurately and look at the expansion and contraction functions, and that's what I've done here, and here's what pops out. The most prevalent cycle going back many, many years is about 49 months. Call it 4 years, because 48 months would be 4 years. And the second, and that was prevalent, oh my gosh, in the 50s, the 60s, the 70s, the 80s, and the 90s. They called it the 4-year cycle. And generally speaking, about every 48, 49 months, plus or minus, we would hit a significant low in the market. 1962, 66, 70, 74, 78, you get 82, you get the picture. However, beginning with the October 2002 bottom, that cycle expanded, and it went to 77 months. And then the subsequent one went to 31 months. The next one, 52 months, as I've shown here on the screen. Well, when I do a little mathematical analysis of that data and put my Fibonacci hat on, I can see the dominant cycle, the most prevalent, the most common, is still 49.2 months. But the second most common in that series is either 30 months or about 80 months, as you can see there on the screen. And those are related by the Fibonacci ratios 0.618, 1.618. So I call this primary monthly cycle the so-called 4-year cycle, but it has two secondary functions. related to by the Fibonacci ratios, 0.618 and 1.618. And the last two recurrences of this cycle were of the 30.4 month garden variety. One was 31 months. That was from the so-called COVID low in March of 2020 into the October 2022 low. And then, lo and behold, on April the 7th, we had the next low in the series, 30 months, still part and parcel of that same cycle. And we've rocketed out of that low. And if we go another 49 months from April of 2025, we get to May of 2029. Wow. And that lines up with this cycle. So, interesting. Now, here's another thing that is really important in looking at this chart. Notice on the way up, we've had right translation. Right translation, right translation. What is right translation, you may ask? If you look at the middle of the cycle with your eye and note where the crest or the high point in price has occurred in each of these structures on the way up, the high point in price occurred to the right of the middle, to the right of the midpoint. That's known as right translation, and that's characteristic of bull market structure. Right translation, right translation, right translation, and oh yes, right translation. So until we see left translation, which we have not yet seen, we are still in a bull market environment. So a number of months ago, last year, I was suggesting that we were probably beginning a significant bear market. Well, that has all changed, Larry. A number of things have occurred in the last couple of months. Number one, of course, we saw right translation. Secondly, we've seen a rocket higher out of the April 7th lows, and we've seen a number of stocks go to new highs. Putting all these things together, it tells me we are in a bull market and we're likely to see new highs. Now, notice this current cycle that we're in of 49 months that I've shown here with my mouse cursor. Mm-hmm. If we go into a significant bear market, we need to see left translation. What does that mean? It means we would top out at approximately the 1/4 point, plus or minus, with a large felt tip pen. So 1/4 of 49 months would be 12 months. So about 1 year off this bottom, plus or minus. So that means first quarter, second quarter latest of next year, we would likely see this thing top out and then head south. That's all conjecture right now. That hasn't yet occurred. We're not there yet.
Stay with us, Stan. We got to pay a few bills. Got to pay a few bills.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, with Stan Harley. Please continue, my friend.
All right, let's continue with our charts, shall we?
Hey, Stan, let me ask you a question. Let's say that the market doesn't make a new high here in the next 5 or 6 weeks. Would that make any change at all, or is it just delayed it?
It just delays it.
Okay, all right, just curious.
Yeah, I'm not suggesting that a new high is imminent as we speak, but I think it is coming. I don't think it's going to occur in the current trading cycle, and I'll show you the chart here to illustrate that. This is a chart of the S&P 500. I ran this off just a few minutes before we came on the air, and I mean, just look at that waterfall decline off the February 19th high into April 7th, and a nearly equally strong rally. And
sure is.
Oh my God, we are just millimeters from an all-time high. Now, are we in the next day or two going to go to an all-time high? I think not. I think we're getting very, very close to what I call a trading cycle high. We are now we're about 40, I think we might be exactly 40 trading days off the bottom. I'd have to check. About 2 months. Darn close to 40 trading days. And it's very common to see a high occur 40 to 42 trading days off the initial monthly primary cycle low. So we are very, very close, I believe, to a trading cycle high. This next chart, okay, before we get to that, take a look at this. This is the New York Advanced Decline Line, a very, very good indicator that many technicians follow. I have followed this for decades, maybe centuries.
Not quite.
Hey, look at
2,000 comedians out of work, and we get you. Go ahead.
Ron White, Stan Harley, Larry Pesavento. Hey, look at this. The advanced decline line went to a new all-time high. Oh my gosh.
Sure
that's
did.
very telling. Wow. And so, to me, with my eyes, that says that's pulling the market up. That says the breadth is very strong, and new highs in the Dow. I don't know about the Dow. S&P, New York Composite, NASDAQ, probably going to new all-time highs. Very, very soon.
Looks like it. Yep.
However, as we used to say in the Navy, I think we might be very, very close to a trading cycle high. We are, just as I said, we're just about 40 trading days off the April 7th low. We're darn close. here is what I've done is I've gone back a couple of trading cycles and overlaid a Fibonacci pattern on the lows, and with the Fibonacci ratios of 0, 382, 528, 618, they line up with each of these lows, and then another Fibonacci ratio that I'm finding to be very common, 90983, lines up with basically tomorrow, June 5th. So what is this telling me? It tells me we are probably within a day or two at most, what I think is likely to be a trading cycle high. What happens after that? Then I think we probably consolidate for a couple of weeks. Perhaps making a low here around June 20th. Now I want to be, as a technician, I want to be following this decline very, very closely. I don't want to be too lackadaisical. I want to track the progress of what I think is likely to be about a 2-week decline into the trading cycle low. The depth of this decline is going to tell me a lot about the structure, the pattern, and the market. If this thing is fairly benign and we find support, say around this blue line, which is the 50-day simple moving average, or even we break a little bit below it, that'll be very constructive, and that will reinforce my view that new highs are coming perhaps in the next trading cycle. On the other hand, if we significantly break down here over the subsequent 2 weeks and really, really threaten these lows down here, then I may have to rethink that. Of course, right translation and some of the other things that I talked about would be a little problematic. It would make the waters a little muddy for the bull market thesis that I conveyed a little bit earlier. But nevertheless, I want to be watching this structure very, very closely. I think it's likely to be fairly benign. That's what I think. And then
the strength of it.
In the subsequent trading cycle, we might get back into the new high ground territory. And all the talk about tariffs and all the noise.
Yeah.
I'm a data scientist. You are a data scientist. We're technicians. I don't try to understand why markets go up or down. What I want to do as a data scientist, I want to look at that data. Just look at the data. Let's see how the market is reacting to all that noise. And let's see if I can understand it. I can model it. And if I can make some type of predictive expectations, hopefully to exploit that information for profit. That's what this business you and I are in, and everybody who's watching this broadcast.
Intelligent risk speculation, as old Roy Fassel used to say all the time. He said, "I'm not a gambler, I'm an intelligent risk speculator." Stan, I have a question about the Hearst stuff. When you were doing the original study, well, we did this together back in the early 70s. God, can you believe that's been 55 years ago, my friend? Anyway, that Hearst book came out in 1970, and that was really groundbreaking because not many people knew of the foundation for the study of cycles. Did you ever go to Pittsburgh to meet Gertrude or anybody like that during those years?
I did not. Yeah. But when the foundation moved from Pittsburgh to Irvine, California, I was very active with the group there because I lived in Southern California for 34 years.
I remember seeing you there. Yeah, that's for sure. Yeah.
And got to be just good. I made a lot of friends and colleagues through my association with that group. I'm still very active with the foundation today, by the way. The foundation is having a conference next week, which is the first one that's been done in many, many years. Going to have a phenomenal list of speakers. I also will be there. So for those who are interested, I'm sure they can Google it. I don't know if there are any spaces left, but it's going to be in New York City, downtown Manhattan, and it's going to be just a phenomenal conference.
Yeah, they do a good job. Yeah. Hey, listen, thanks for joining us, my friend. We're going to have you on in 2 weeks when the market is bottoming, and we'll see where the buy point is, okay?
I look forward to it, Larry. Thank you for having me.
Hey, thank you, Stan. You're a stand-up guy. We love having you. Thank you so much.
My pleasure.
Okay, we're back, folks, and we're setting with a 4-cent loss. Keep your stop working at 96, folks. If you get a chance, you might be able to get out of this at break even because it's certainly not following the program that I thought it was going to do. So keep your stop working. When we get back, we'll review this trade and see where we stand, okay? Hang in there.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I have a special treat for you folks, those of you that want to partake in it, and that is that one of my very good friends, a former student, and his wife, Ziggy and Mara, over in the UK. They were bond traders for Goldman Sachs over in the UK for many years. I met them 25 years ago, and we became friends, and they do what I do right now every day. And anyway, Ziggy likes to do research, and he found a 10-hour video of the Manly Hall book, Secret Teachings of the Ages. Folks, that book is beyond doubt the most valuable book in my library. And I used to go, when I was in Pismo Beach, I used to drive down, well, let's go before that. When I was with Eli Lilly, And Don Mack introduced me to that place, the Philosophical Institute up on Mulholland Drive, which was right across from the Jewish Center, and 2 blocks away is Mike Milken's house. Anyway, they would have monthly meetings, and several times Manly Hall would be guest speaker, so I would go up there and listen to him when I was in L.A., in Westlake Village, and also when I went to Pismo Beach. So Twentyman and I went down from Pismo Beach to hear Manly Hall speak and get autographs and stuff, and we got into the room. We got there early. We were setting up in the front of the room, and 2 girls came in and sat next to us, okay? One of them was Shirley MacLaine, and the other one was Linda Evans. And Twentyman and I just bust out laughing. They were smiling, and they said, well, we kind of get the joke. And I said, you mean you're really not here for a double date? And it was really, really, really funny. JT never forgot, neither did I. But anyway, it's an incredible book. It's, oh my God, it's got some of the most beautiful diagrams. You've seen that book of Pythagoras, that picture of Pythagoras that I show on these things here. That was it's still there. It's 6 feet high, 4 feet wide, done by Augustus Knapp, oil painting, in August of 1929. The book started to write in 1921. He finished it in 1926. He was homeschooled by his mother. When it's ready, I'll send it. Only to people that want to spend 10 hours, 2 hours a day to listen to it. It's worth every second. Live every day in an attitude of gratitude, and may God bless.
Steve Rhodes started his